All right. What's up, everybody? This is CRL Chart Request Live, the show where you provide the requests, we provide the charts, and we all have fun in the process. Spencer Israel, in for Patrick. Steve Strauss is here as usual. Mr. Straza, how are we doing?
Good. How you doing, buddy?
Oh, fantastic. I'm feeling a little better. I was powering through a cold a couple days ago, but I'm on the upswing now, so I feel
Yeah.
good. And the market feels yeah, okay. Mm,
Yeah.
yeah, yeah, you know.
You know,
'Cause-
the situation from a tape reading perspective has been this pretty much for the past few months. The broader market is moving based on the bond market, right? So whether we get some sort of broad rally or broad sell-off, whatever internals are doing that day, you could pretty much look at a chart of the 10-year and figure it out.
yeah,
Then on top of that, there's the mega caps that are all trading on different things, right? That are far less affected by what's going on with interest rates and are far more affected by their individual earnings reports or today just massive sympathy selling across software on the heels of this Salesforce miss, right? So the mega caps are kind of like doing their own thing based on whatever's going on, and then the rest of the market's trading on the bond market.
yep,
Does that make sense?
exactly. All right. We got a few requests here from the inbox. Let's start there. This is
Yeah.
a very interesting question. I want to start with this question from Joseph. Joseph owns Marathon Oil, MRO. They're getting acquired by ConocoPhillips. So, Joseph's question: do I hold my Marathon Oil shares until the deal closes and I get ConocoPhillips shares, or do I not? And obviously, we're not going to provide personal financial advice, but what he's really asking here is, do you like ConocoPhillips, right?
That's
Because this is an all stock transaction, which means that Marathon Oil is going to trade with COP, and the
yeah.
ratio, what you need to know if you're in the stock, is 0.255. So what does that mean? It means you take ConocoPhillips, multiply that share price by 0.255, and that's what Marathon should trade at until the deal closes. So what he's really asking is, do you like COP for the next year or so?
Yeah, so I think for about every 4 shares of MRO that you own, you'll get one of Conoco is how that'll end up working. And you're right, Spencer. The question that you should be asking yourself, Joe, is do I want to own ConocoPhillips? Right? Because now you effectively own ConocoPhillips, right? MRO is going to move based on Conoco stock price if the market's pricing in this deal happening, which I think it is. Let's just mark up Conoco. Simple answer for now is no. Right? Conoco, big run off the 2020 lows, just like everything else in the oil and gas space. And then just a monster base here that is yet to resolve in either direction. So a chart like this, I see a sideways, 200-day moving average. I see a big range here. I see trendlessness. Let's see what momentum's doing. Overbought, oversold. That's trendless momentum, right? No real regime there. This is opportunity cost. Conoco right now. So my answer would be no.
All right, good
I want
question.
to own
Good answer.
I want to own Conoco above these pivot highs or these 2022 highs right in the 130s.
All right, next.
Yeah.
All right, Praveen asking about Snowflake. Steve, you're asking about software stocks earlier. This might be one of the only ones
Probably not
get
a
on
good
today.
day. Yeah. So this is what's happening. Look at that VWAP. Wow. Okay. So
Already marked up.
speaking of opportunity cost, right? Sideways 200-day moving average. This is a hot mess. What a messy, messy mess this is. Right, you could draw this a number of ways. I'm gonna draw a trend line there. It's breaking. Right. I would anchor VWAPs from all of these lows right now because that's going to just show you that sellers are so in control over every time frame here. Right. Below any VWAP that you could drop on this chart right now. So long-term trend, I guess sideways. Tactical or short-term trend, lower. Intermediate term trend, probably lower. This one's probably revisiting these range lows, right? So 122, 110. Those are all downside levels that I'd be paying attention to. But no, you don't want to be long this. And you don't want to be long most software stocks today. If I could just real quick, Spencer, it's pretty broad. The sell-off on the heels of Salesforce.
Thank you very much, Salesforce.
Yeah. So look, Salesforce having its worst day pretty much in history. Like a month after the stock IPO in 2004, it had a like down 30% day. But outside of that, this is like the worst day in Salesforce history, 20-year history. So the entire tech sector, or tech industry, I should say, is really feeling it. Worst day since, I don't know, the bear market lows, or when market internals bottomed back in June of 2022. Software is a critical group, so we don't want to see that. I would mark this up like this right now and be asking myself, is this top going to be simply another failed top like this one back here last October, right? And bulls ought to hope so. Software is an important group. You don't want to lose software. What else?
Real fast. I don't know the weighting of Salesforce in the Dow. Maybe you can look it up faster than I, but just want to say, impressive nonetheless to see the Dow green.
So the way you would look at the weighting of Salesforce is you could just sort
Actually,
it.
I guess the index is red, but the diamonds is up. So that's what I'm looking at.
It's got to be one of the larger ones. It's the 10th largest stock by price. Dow's price weighted, right? So should be in the upper half at least. Again, there's broad strength today, Spencer, outside of this software situation. Yeah. The market looks fine. It's like the opposite of the day after the Nvidia report, where Nvidia was holding up the indexes.
Yeah.
Everything beneath the surface was not so good. Today's the opposite of that. So
no kidding.
Yeah.
Okay, let's go through a couple more from the inbox, and then we'll get to the chat. Do you think the near-term lows are in for BWXT? This is from Daniel.
I know what to do with this one. Look, you're in this one because of this, right? So if you own BWXT and you own it because you were reading what we've been writing about it, you got in on this breakout, right? Watch this base for such a long time. So that structural base breakout still very much intact, despite being off, I don't know, 15% from the highs here. So if we just fib this out a little bit, you got a level right there. So let's zoom in now, right? Because we're kind of in no man's land in between our fib levels here. Let's look at a daily. So how do we want to do this? We have a little coil here. And I also think you can drop a VWAP from the January lows here. Yeah, I think you get confirmation up here at the 161.8, which comes in right here. This is nice, Spencer. Comes in right here around these pivot lows. Right? And we've had some big candles in this area, right? We had a gap up February, big red candle in April, and then a monster gap down below this level in May. That's the market telling us, hey, this 93 level is a big one, right? Keeps gapping all around it, okay? This little coil now, you want to see resolve higher. If this is a name that you're trying to get long, right? We want to see this coil resolve higher. Let's get confirmation back above this VWAP and this little polarity zone here in the low 90s. I think you can own it then.
All right. Just so everyone knows, there's a couple tickers we got in the inbox that are a little bit too small for us, so I'm not going to look at those.
Too spicy for you, Spencer?
It just, you know, we don't look at penny stocks unless they used to be not penny stocks, and even then we probably won't. And also, you know, I would say my line is, I don't know, my line is small cap and up, right? So
5 letters in the ticker. That's my line.
Okay. Right. What about, so Hansen is looking for one. He's got 2 here. He wants to know which one you like more, GGAL or BMA. The charts look kind of identical to me.
Because they're both Latin American banks.
So well, that's why they look identical.
This is BMA. Looks great. And this is the GGAL. Ooh, Spencer. They look too similar, don't they? What was it? BMA? Bank of America?
BMA.
So let's just Let's ratio them out.
That's what I would have done.
Yeah, so in terms of size, we got GGA. Yeah, they're about the same size too. All right, let's see. This is a ratio chart of the GGAL versus the BMA. You're not going to get much here.
That's
The answer to your question is really just based on the price history here and how dead this ratio is. I mean, ratio charts should move a little bit more than this over time, right? This thing's not going anywhere from 0.3 13 years ago to 0.6 today. So I guess it's kind of doubled in GGAL's favor. You look back at annual performance, though, between one of these, you might differ by, I don't know, a couple percentage points at best. So I think they're both great buys here. GGAL maybe a little bit stronger throughout history. Maybe there's something there. But either one is probably a good bet. I think we're starting to like Latin America more. The banks have been good. The bases are very much in, right? With something like GGAL, this base really resolved here, right? Already hit a target. Next stop, those old highs. That's how I would work this one out. You got some really clear levels in GGAL, so I do like that, right? You have these two highs from January and August of 2019 that come right in around 37. We're there, right? So strength above the pivot highs from May through 37, I think is a really nice way to play the GGAL with a target almost 100% higher at about 72.
all right. A couple more quick, then we'll go to the chat. Our old pal Wavy is looking at EQT. Says we have a breakout in EQT. Do we?
Is this the MLP?
I actually don't know. What is it?
It is. Wasn't this one used to call like Equitrans
I
midstream?
don't think it's an ALP.
Yeah, because it's a low yield.
Natural gas production company. But I'm not. Yeah.
Low yield, huh?
Yeah, there's no yield, so no.
Integrated oil. So Wavy probably likes it because it's a monster base. Yeah. I don't know. You can find better bases out there than this one, Wavy. Right? So like, why do I say that? Get it through this range. Right? So it's just not the cleanest, right? I could draw a couple lines on this chart of some levels that I would be paying attention to, but really this needs to resolve, right? Before I really want to own this one. And then even once this resolves, right? There's still a little bit of overhead supply up here at those May 2014 all-time highs around 60. So let's contrast this with a base that I would be buying in energy. Okay. This is CNQ. Notice how this one looks different, Spencer, right? We got a clear level here, right, that we would have called like the base breakout level, right, in CNQ. That base has resolved. And not only has the structural pattern resolved higher in the case of CNQ, but then if we were to do something similar, like we did mark up the range on the EQT chart, it would look like this, right? So we've resolved the multi-year range and also the multi-decade base, right? Those are the ones that I'm really interested in energy. Those are your leaders right now. So unlike EQT, still work to do. It's a little bit messier. Probably comes with some more opportunity cost than something like CNQ. Does that make sense?
Yeah, I followed you. Last one here from the chat, from the email. Alex on EU uranium play. Small cap, I think. Or mid cap? Mid cap, maybe. I don't know.
Why does this chart look like this?
That's the one.
NASDAQ, huh? My cat's going crazy. She hears us talking about uranium stocks in here. She wants in. All right, 900 million market cap.
All right.
It's kind of, let me just check volume here.
A million shares a day. Not, it's okay.
Yeah. All right, it's fine. I don't know if this is the right data. So I have a lot more data for it, and the chart actually looks a lot better. Anyway, let's just look at the daily. I think the data's fine here. So look, back at the upper bounds, back at the scene of the crime. This is your breakout level. We're here. This is something I would definitely be buying on strength. And I believe I heard uranium, so
Yeah.
love that. Gotta love that. Let's see what those levels would be, Spencer. Just draw out this base here, right? This is the setup. This is one of those chart patterns that we keep buying. I think if you're looking to jump it, you got pivot highs here at 5. Nice round psychological number. And then for confirmation, I think you really want to see new all-time highs, right? So I think you could get involved here at 5. But ultimately this has got to be above 530, right? To be a valid breakout. And then you could be targeting, could either measure out the base, right? So if you measure out the base, say 170 to 530, so that's what, 360, you tack that on to 530 and you get 890, right? So 890 is the base measured out, and then the 161 is about 750.
All right, finally, we get to the chat. Let's start with this question from Donovan. Broadcom looking like a failed breakout, but he says, and I'll take his word for it, has earnings coming up. I don't know when.
June
June
12th, it looks like. Listen, Broadcom's so good. This is one of the just monster leaders this cycle. And really forever now. So here's Broadcom relative to the S&P 500. Here's a weekly chart of what that looks like, right? So names like this, whether it's Costco or Broadcom, right? They just keep working. They just keep outperforming. It's more of a game of just managing risk responsibly and finding logical levels to enter and exit a trade. So for Broadcom, the way I would do this is just fib out this base that resolved higher a while back. Let's do it with a line chart, nice and clean, right? And you can see price reacting to these levels. Clean some of these lines up. Don't need those. So you can see price just stopping, pausing, consolidating, digesting gains, right? These logical Fibonacci zones. I think this one will be no different. Up here, call it 1500. Right? I think we'll probably get there pretty soon. Maybe earnings is the catalyst, maybe not. But think about the way this one's holding up also, right? Well, tech stocks are really coming under pressure past few days, especially today. Broadcom looks good. I think 1500, strength above 1500. I think if you're trying to jump it, you could use this March high, 1400. Right.
All right. We might as well stay in the semi space with the next one. Form factor.
You don't want to be involved if we're below these pivot lows, that's for sure. Right. You got this little range here. All right.
Yeah, form factor, which is also a semi. So might as well just stay here.
Yeah.
Look at that thing. What a breakout. Wow.
Oh, God.
Whoa.
Wow.
This is some financial crisis type levels here.
This is great base. This is, yeah, it's a financial crisis base, not even a dot-com bubble base, because this one was not around during the dot-com bubble. So we go all the way back on this chart. This is the full history for this ticker. Look at this monster base. Someone called it a cup and handle, right? We had this hard shake. Look at this drawdown here, right? You're holding it from 2020 through 2022, more than cut in half. Now launching higher, back at new all-time highs. Really clean level. Right here, 48.50, all the way up to 51, 52, right? The highs from just a few years back. We're above these levels, or this little range here. This is a valid breakout, gotta be long. This is the best chart I've seen today.
Best chart he's seen today.
Target 77, next stop 122. I kind of like the 122 target. Yeah, this is a great chart. If you measure that base out, I mean, 45 points. So I think 100 could be a logical target too. You know, mid 90s, measure that base out. Probably get that $100 roll, psychological level, right? Great chart.
Nice. All right. Thanks for this one, Nicholas Trades. What is his name? McMaster Girth the Splitter. All right. Hey guys, I've been buying S&P 500 ETFs, and I'm interested in the CAD dollar to decide whether to buy hedged or unhedged.
What?
This person might be Canadian.
What did he say? Read it again.
CAD dollar.
Yeah, I'm familiar with it.
Okay, yeah. So this person, it says that I've been buying S&P 500 ETFs, and I'm interested in the CAD dollar to decide whether to buy hedged or unhedged. So again, I'm assuming this person Canadian.
Yeah. Mess, just like most currencies, right? I don't think there's much of a bias here. If we break these pivot lows, you don't want CAD exposure, right? If this is looking like this soon, right? So we have the larger range here. Pretty clean range too, right? So this is the world that you're living in. CAD dollar right now. So upper bounds call it 83, lower bounds call it 68, right? And now we have this micro range really going on since last summer here within this larger range, okay? So here are your levels. If we're below 72, we're likely revisiting 70, even 68, okay? If we're above 76, we're likely revisiting the upper bounds 80, 83. That's it. If we're stuck in here, this is just chop. This is just noise, right? So how about a resolution from the smaller range first? That'll give you your bias. But until this broader range kind of resolves itself, this is just trendless. And I don't think, you know, hedged or unhedged, I think you would want to care a lot more about that after you get a resolution, right? And a shift in the primary trend. Right now, the primary trend for CAD is just sideways. If that shifts to higher, then yes, you want the CAD exposure. If that shifts to lower, no, you don't want the CAD exposure. Just messy.
All right, let's wrap up with a couple more. BC Tokyo, welcome to the show. He's asking about RTX, which he's been in since 92. Really? So 92, he's worried about the triple top at 107.
Spencer, weren't you born in 1992?
No, I was born in 91. I'll have you know. Thank you very much.
Wow.
But I mean, I think he's referring to the price, not the year. I hope he's not referring to the year.
Oh, I thought he meant he's been in since like 1992.
No, 92 the price.
Okay, got it. That makes more sense. We got in at 92, which I see why. I believe this was probably the reasoning here, right? Before, this chart had all this price action here. Just kind of looked like this, right? We were breaking out. He was probably entering here above the prior cycle highs, pre-COVID highs. That's right around 92. Now, what happened in the time since? This thing just got real messy. I hate this. So we've had several false starts, whipsaws, shaking above, shaking below key levels here. Look, a big one to the downside. This is a hard shake. I don't know. Kudos to you for holding through this. I wouldn't have, right? Now we're back at the upper bounds. I think this needs to stick this breakout this time around, right? We failed once, twice, 3 times. Now we're back up here again. Let's just look at this nice little coil we got, right? Yeah, this pattern needs to resolve higher here. Just like this little coil resolved higher a few weeks ago. Okay, this little coil now needs to resolve higher. Draw that however you like. Above 105. I only want this above 105. Otherwise, this range is just too wide and too messy for me. So above 105, I love it. And then I think you could be targeting, you could do this a couple different ways, but if we just fib COVID here, it's going to give you about 125. Not bad, but it's really only 20% of upside, right? Seems like a slower moving stock. I don't
I
love
was
it.
gonna say that's a lot, man, for RTX.
I don't love it. What kind of company is this?
This is defense. This is the combo of
This is Raytheon? Yeah, this
Raytheon
is the old
and
Raytheon.
is it LHX? What was it?
Yeah, L3 Harris.
No, it's not L3 Harris. It was the other one. Raytheon and I forget it. Not gonna remember. But
UTX. UTX.
yeah, it's the one. UTX. There you go.
So
Okay.
is this the Dow?
Is it in the Dow?
Yeah.
I don't know. I don't keep a list of Dow stocks handy. You can
United
look it up.
Technologies was in the Dow. Anyway, moving on.
Anyway, all right, let's do one more.
Yeah.
And only because they have earnings tonight. James asking about Dell. This is everyone's favorite non-Nvidia stock, although it's getting hit today. But the earnings tonight, that's the caveat on Dell.
So this is the dude, you got to get a Dell rally. I stole that from cable TV. Wow. Can we just say this was like, this looked great and was very viable like a few weeks ago? Holy cow. I mean, they say it's an AI stock, Spencer. And when I look at the price action, I think to myself, it's got to be an AI stock. Boy, oh boy. This one has just had nice base after nice base since it came public back in 2018 or 2019. Let's look at this most recent base. Let's fib it out. Try to find some sort of logical level to get involved. At this point, I don't think you want to be buying Dell like right here today. Let's see what the fibs give us. And we'll zoom in a bit. Okay, so some logical levels. I don't think you see this one again, right? This 261 down here around 108. I don't know if you're going to see that again, at least not this cycle, right? This makes a lot more sense up here. This 154 zone, right? Because we did have this teeny little coil right here. I think weakness back to 154 you could take a shot at, but really I would want this one at this shelf of pivot highs, right? Where we gapped through. We got a high from early March, a high from early April, and then we were just kind of chopping up here right before the report. We got the gap and go, and now we're going again. So gosh, we get some weakness back to 134. I would love it there, and I still like it at 154. Target 229.
I don't know. Did I say something unintentionally funny in the chat? I don't know, or some chat saying I did. I don't know what I said, but whatever that was funny, you're welcome.
I think you read that person's name. That made me laugh.
All right, maybe that was it. Cool. Whatever.
Yeah.
Hey, all right. So CRL, Chart Request Live, right? Every Tuesday, every Thursday, 1 p.m. Eastern time. If you have requests, you want to get them in ahead of time, we go through the inbox first. You can always email us questions at stockmarketmedia.com.
Yeah.
And we'll be back on Tuesday, right here. Same time, same place.
Yeah. And Spencer, just a closing thought here. Guys, software is getting blasted today. And when you look at the software stocks that are not getting blasted, they really stand out. Palantir is one of them. What's going on with you, Palantir? Up 4.5% while software is getting slaughtered? It's got my attention. Okay. This was fun.
Good to know. All right. See you guys.